Well, what's happening? What's going on, YouTube? Welcome to the first episode of my YouTube channel, Investing with Connor. Basically, I thought I'd just start up a YouTube channel, just kind of documenting my journey to financial freedom. Basically, I kind of thought to myself that I want to start making my money work for me. I kind of thought of different ways of doing this. First, it was like, okay, maybe a high interest savings account. But then I quickly sort of done the maths on that, and it's like you get like between 1 and 2% of your savings, so I'm not going to reach financial freedom anytime quickly going through that route. Second kind of thing I thought about doing was real estate, like buying a house, doing it up, and then selling it on for a profit, or buying a house, getting someone in to rent it, and then earning money through the rental income. But unfortunately, I'm not rich enough to buy a house, don't have enough savings for a down payment or whatever, so that was kind of out the window. And then that eventually brought me on to stocks and a thing called Dividend stock investing. Basically anyone can do this. You don't need a lot of money to start off. You can buy a stock for $5 if you like, or even less. I do it through an app called Welthsimple Trade. I'll talk more about Welthsimple Trade in a different episode maybe, but it's a really easy to use app. The fees are like zero, so you don't doesn't cost anything to buy and sell stocks, so it really suits the beginner. And then basically I buy dividend stocks. So basically what that means is companies pay out dividends to their investors. So they like a certain percentage of their profits goes to their investors. So for example, like really basic example, you could buy a stock for a cost of $100. And if they have a dividend yield of about 4%, that's what I try to aim for. Some companies will have lower than 4%, some companies will have higher than 4%. We'll go into more detail about all that again at a later episode. But I try to aim for 4%. So if you buy a $100 stock and they pay an annual dividend rate of 4%, that means you'll be earning $4 per year on that stock. And that's not to mention the capital gains either. So if you buy a stock at $100 and throughout the years of you owning it, it goes up in value, that's capital gains. But basically for this first episode, I thought I'd just sort of dive into my portfolio and give you a look at what my portfolio is and the different stocks I own. I'm not really going to go into too much detail about why I've picked certain stocks, but I am definitely going to talk about that in different episodes. For now, I'm just going to go through my portfolio and show you all my stocks and kind of talk about what dividend yield each stocks has. So if you want to watch me in this journey to try and hit financial freedom through earning passive income through dividend investing, or if you're trying to just get some tips for your journey to your financial freedom, please hit that subscribe button, hit the like button. And I'll be producing as much content as possible. Try to get maybe one video a week, maybe more. For now, we'll just dive straight into the portfolio here. So here it is. So here we are, folks. Here's the TFSA. As you can see, it says here I've got $7,423 in it. That's actually not quite correct. I just recently stuck $800 in it today, and there's some sort of wee glitch in the Welthsimple Trade app at the minute. So it's automatically added that 800 in before I've even bought any stocks. So you can actually just take off 800 from that total figure, and that's the actual figure of what is in my TFSA. By the way, TFSA stands for tax-free savings account, which if you are from Canada or live here in Canada, you'll know more about. But basically, it's the best way of buying stocks because you don't get taxed with it. This here figure is correct. It says that I'm down $341 all time, or 5.4%. That figure is correct. If we look at the day value, today alone I'm down $195 or 3.11%. Overall, there we are, back to the overall one. Overall, I'm not too worried about being down 5 or 6%. Really doesn't matter. I'm playing a long game here. And to be down only 5 or 6% during a time like this when the stock market is really volatile due to the whole sickness, due to the whole pandemic that's going on, being down only 5 or 6% is pretty good. And I'm confident in years to come that's going to go up. That is going to go into the positive one day. So without further ado, we'll just get stuck in here to all the stocks that I own. First up, we got Apple at $307. I've got one share in Apple that I bought for $265, making up just under 7% of my portfolio. Total return, I'm actually up $40 with this one, and they have a dividend yield of 1.25%, which is quite low. Normally I try to aim for 4, as I was saying, but with tech companies, they tend to pay out a lower dividend because they use more of their profits back into the company to be creative with, to make new products. Next up's Air Canada. Air Canada isn't actually a dividend paying stock. It's the only stock in my portfolio that I bought with the knowledge that they do not pay dividends. I just seen potential for a lot of capital gain here. It was just at such a good price. Average price was $16. I'm currently down $16 with this investment. I've got 8 shares, making up less than 2% of my portfolio. Next up, we got Bank of Nova Scotia here. I've got 5 shares with these guys, an average price of $58 a share, making up 4% of my portfolio. I'm down $42 altogether with this stock, and they have a nice dividend yield of 6.77%. Next up is Carnival Cruise Corporation, which is one of the biggest cruise companies in the world. I've got 8 shares with these guys at an average price of $17.52 a share, making up 2.2% of my portfolio. And I'm down $42 with these guys. The dividend yield is 15.16%, but I know that's actually not true. Carnival Cruises have recently suspended their dividends until further notice. They need to just hold on to as much cash as they can in order to get through this pandemic. As you all know, cruise companies have been hit probably one of the hardest out of all the different types of companies during this pandemic. Next up, we got Canadian Tire. I've got 3 shares of these guys at an average price of $113 a share. They make up 4.6% of my portfolio, and I'm down roughly $50. They've got a nice dividend yield of 4.22%. Next up is Delta, another airline company. I've got 5 shares of these guys at an average price of $31.27 per share, making up just over 2% of my portfolio, and I'm down $60 with these guys. The dividend yield is 5.74%, but again, just like Carnival Cruises, I know that's not true. They've actually suspended their dividends, trying to hold on to as much cash as they physically can in order to get through these tough times. Next up is Enbridge, which is an energy company here in Canada, one of the biggest in Canada. I've got 5 shares at an average price of $44 a share. I'm down $3 overall, and it makes up just over 3.5% of my portfolio. They've got a nice dividend yield of 6.67%. Next up, we got Fortis. Let's see here. I've got 7 shares with these guys at an average price of $53 a share. Total return is minus $6.63. They make up over 5% of my portfolio, so quite big. They've got a nice dividend yield of 3.5%. Next up, we got General Dynamics. These guys are like an aerospace defense company in the United States. I've got 3 shares. My total return is, I'm down $1.59. Makes up 8.86% of my portfolio, and the dividend yield is 3.15%. Next up, we've got IBM, another tech company here. I've got 1 share just at an average price of $119 per share. Total return on this one is negative $3.46, and the percentage of my portfolio it makes up is 2.63%. They've got a nice dividend yield here of 6.74%. So next up is, let's see here, Pepsi. Reason I have Pepsi, not Coke, simply is because I prefer Pepsi over Coke. This is, they say, a recession-proof stock. No matter what happens, whether there's a recession that lasts for 3 months or 3 years, people are still going to be buying Pepsi products. So always a good stock to have. I've got 1 share and I paid $128 for it. Total return, I'm up $3.83, making up 3% of my portfolio, and have a dividend yield of 2.87%. Next up is a REIT. It's a Ryokan Real Estate Investment Trust. So this is like a real estate stock. I've got 8 shares with these guys, an average price of $16 a share. I'm down roughly $20, and it makes up less than 2% of my portfolio. Has a pretty high dividend yield of 10%, which I suspect they may cut. Next up is Shaw Communications. This is like a Wi-Fi company here in Canada. They also do cable TV. I've got 10 shares with these guys at an average price of $22.76 a share. Total return is negative $6. It makes up 3.5% of my portfolio, and the dividend yield is 5.22%. Next up, we got Sun Life Financials. These guys kind of are all about insurance and other financial bits and pieces. But I've got 5 shares with these guys at an average price of $44 a share. Total return is I'm up $7.74. They make up over 3.5% of my portfolio, and a dividend yield of 4.5%. Next up is Suncor Energy. This is one of the biggest oil companies within Canada. I've got 11 shares at an average price of $23.45 a share, making up just under 4% of my portfolio, with a total return of just under $11.32. Dividend yield, really high dividend yield here, 7.28%. Next up, we have Thales Corporation. I've got 16 shares of these guys at an average price of $22.64 a share. Total return, I'm down $2.44. It makes up over 5.5% of my portfolio, and they've got a dividend yield of 4.37%. Next up, we got TD, Toronto Dominion Bank. This is one of the big banks here in Canada. They are also based in the United States as well. I've got 10 shares with these guys at an average price of $58.95 a share, making up 8.82% of my portfolio. Total return, I'm negative $35.73 for these guys. And the dividend yield is a nice 5.3%. I'm a big fan of TD. But by the way, if anyone wants more details about any sort of stocks that I'm talking about here, just leave a comment underneath. I'll get back to the comment. If not, I'll maybe even actually do a video on certain stocks and reasons why I like certain stocks and why I'm banning them. So yeah, just leave a comment down below. Next up here we got VDY, which is an ETF. An ETF is like a lot of different stocks all in one. It's a good way of diversifying your portfolio. So you can invest in 100 stocks by just investing in one ETF. This here one happens to be a high dividend yielding ETF based with Canadian companies. I've got 19 shares. I really like this ETF. It's over 8% of my portfolio. Average price of $27. My total return is I'm down $1.70. Dividend yield is 5.34%. Next up, we've got VRE, which is another ETF. It's focusing on real estate, so a lot of real estate stocks in this one. I've got 12 shares, average price $28 a share, making up 4.5% of my portfolio. Total return is negative $51, and a dividend yield is 7.33%. Next up, I've got XIC, which is another ETF. Focusing on US companies this time. I've got 8 shares at an average price of $23.11 a share. Total return is I'm up 34 cents, makes up just under 3% of my portfolio, and it has a dividend yield of 3.6%. We'll go back here. ExxonMobil, this is one of the biggest oil companies in America. I've got 3 shares at an average price of $42 a share. Total return is I'm down $1.73. It makes up 2.86% of my portfolio, and it has a massive dividend yield here of 9.86%. XRE is another ETF, again focusing on real estate here in Canada. I've got 22 shares of these guys at an average price of $14.92 a share. Total return is I'm down $26. It makes up just less than 5% of my portfolio, and the dividend yield is 6.63%. Next up, we got XUU, which is another ETF focusing on US companies. I've got 3 shares. It just makes up not even 1.5% of my portfolio. Average price of $30, and my total return is negative $2.66. They've got a dividend yield of 1.78%. And last but not least is CEB, or CEB, sorry. This is another ETF focusing on the major Canadian banks, basically. I've got 6 shares with these guys, an average price of $21.81 a share. Total return is negative $2.58, makes up just over 2% of my portfolio, and has a dividend yield of 5.12%. So yeah, that's basically the portfolio in a nutshell, folks. So there you have it, folks. That's the sort of conclusion of my first episode. I hope you enjoyed it. I hope it didn't drag on too long. Please, if anyone has any comments about any certain stocks or any questions at all about me, just leave them underneath and I'll get back to you as soon as I can. The reason about the accent is that I'm actually Irish. I'm from a place called Belfast in Ireland. I've been living in Canada for over 2 years now. So if you were wondering about the accent, that's why. And that's about it. The plan going forward basically is to keep producing as much content as possible. Next week I'll give you an update on the portfolio. We're going to actually talk about the different dividends I've earned. So I'm actually going to show you the dividends I've earned in the last 3 to 4 months since I started investing. And I'm actually going to buy a couple of stocks as well in the next episode, and I'm going to talk about why I'm buying them stocks. So please stay tuned for more, and don't forget to smash the like button, hit subscribe, and you can follow me in my journey to financial freedom. Have a good one, folks. Take it easy.